Hello. Yes, now you can hear me. So let's start again. Hello, everybody. Welcome back to this live by Dubai Trading Academy. Okay, so maybe the mic we're not gonna put it like that. If we put it here, yeah, you can still hear me pretty good normally. So today's live is for educational purpose and is in absolutely no way investment advice. You should trade at your own risk and with a full understanding of the different risks involved while trading. So as always, the live will be organized as follow. We are first going to start to review the economic news and bring a special focus on central bank decision because they happened yesterday and today, so they are quite fresh for the market. And the market reaction will tell us a lot about their importance. Then we are going to look at the economic calendar as well as the different asset class. Then we will look at the S&P 500 from a technical standpoint to try to establish our trade plan for the day. And while we wait for the market to come at our level, we're gonna basically answer a few questions that people send us with a special focus on beginner level question because last week I had several comments that said that maybe beginner friendly if I could maybe be more beginner friendly. So I'm your request, I oblige. So, talking about the economic news, the major one was the Fed meeting yesterday, where basically they maintained the interest rate at 550%, but they had a very dovish tone that kind of surprised the market, especially Powell talked about the possibility of lowering the rate way before what we expected. So that was pretty big news, especially because, like I said, we were expecting uh, not the decrease of the interest rate around something like June, maybe March at the earliest, but mostly June. And in the end, March is becoming more and more credible. So this became quite. So this was a pretty good news, and as we're gonna see, it sent the market way upward. I think yesterday, basically, after waiting all day for the probability, for the like we say for the Fed decision. Then afterward, we had the Bank of England as well as the European Central Bank who published their decision today, and both of them decided to maintain the interest rate at the current level. So same way, it's a bullish signal for European market and English market. But since we are trading American market, this is not really gonna affect us that much today. On it still has an influence. We can show you on the market the effect the news had, but not as much as it would have had on the DAX, for example. So if we look at the economic calendar for the day, let me bring it for you. Puff. Like I said, we can see 70% of the trader that expect a decrease in March, decrease from like a decrease of the rate in March, and 60% another one in May. So we can see that the market is pricing quite aggressive Fed dovish policy, quite aggressive dovish policy by the Fed. Sorry for my approximate English. So let's see the economic calendar for this week. So on Monday there was not a lot of statistics. Actually, there was mostly none. On Tuesday we had it's slowly loading, but like I said, not a lot of economic statistics. We had the auction for the 3 year and 10 years, but they were lower, way lower than. But as expected, they were way lower than previous one. Then on Tuesday we had the CPI that was same as expected, better than previous, and slightly worse month to month. But that wasn't sufficient. enough for to force the central bank, the Fed, the Federal Reserve, to increase their interest rate. Then we had the 30-year bond action and the EIA energy outlook, but since we're not trading oil, it's not that important for us. Then on Wednesday, yesterday, we had the PPI, the core PPI, the OPEC report, and the FOMC Fed interest rate decision. So basically, the PPI was better than expected because it was lower, and we're in a phase, like a period where we want disinflation and not we want the inflation to reduce. And then, as I said earlier, like the Fed maintained the interest rate. If we look, for example, at the S&P 500, if we look here, we can see that at 8, at the publication of the results, it basically went shooting up and never stopped for 1 hour before correcting a little bit and then going back to reach maximum level. And then staying all the way until closing, then opening, and then continuing its way up. So that's basically what the Fed and the market did. Tac, tac, tac. Then today was the ECB and BOE meeting. So BOE voted to unchange, the majority of BOE voted to unchange the rate, even though there was one more person that voted to hike the rate, even though than expected. So 3 against 2 expected, and 6 to keep it unchanged, and 7 to keep it was expected. And also we had the central bank rate at 2.15, and we can see that basically they remain the same as previously. Then we had the core retail sale, the export price, and the jobless claim, and basically they were all slightly better than expected. So it tends to show that we might have like the soft landing the Fed was hoping for. Then at 4 we're gonna have, in 2 minutes, we have the ECB economic bulletin. Like at 4 we have the business inventory and retail inventory, and then the speak from our dear Miss Lagarde. And tomorrow we have the French CPI, the German PMI, European PMI, some UK PMI as well, and then the industrial production, as well as some PMI, S&P PMI for the US tomorrow. So basically the main statistic of the day and the week, actually, probably even of the month, were the one that came today and yesterday about central bank rate policy. Then afterward, let's look at the different asset class. So it might appear in French on my screen, but the idea is the same. So basically, we can see that most of the equity are in the green except Japan. Then bond, they're all collapsing. If we look at the 10-year US, we can see we're at we're at 3.9% a year, like of yield. So which means that people started buying back more US bond because they were not expecting they're not expecting any more rate hike. So therefore they expected that the 5% we had previously was the absolute maximum. Let's continue. So basically, like I said, in like 2 months, that's a big move for the 10-year bond, US 10-year bond. Equity, we can see also that if we look at the Dow Jones, we are probably still at the all-time high, but yesterday it closed at the all-time high. Same for the Nasdaq Composite. So yeah, let's look maximum. Yeah, we are at an all-time high. So that's quite interesting. And the Nasdaq Composite, yeah, I don't have it on my list. If we look at the be nice, please. Well, the Nasdaq Composite also closed at highest level yesterday. If we look at commodities, we can see that gold is pretty high at 2060. So we finally broke off the range we were like stuck in for several time, and we might be starting to go back up. The oil is slightly higher than is on a slight rebound compared to last week. But considering all the good news for the the equity and capital market, I wouldn't be too worried about the oil. If we look at the currency, we can see that the GPY is going up and the USD is going down. We can see that also, you probably don't remember, but on one of my previous live from, let's see how long, because yeah, from 1 month ago, I said that the GP, like the Bank of Japan, the BOJ was gonna defend the 152, the price level of 152, and we can see that it was the highest it reached before coming back down. So that's kind of nice to show that I still know what I'm talking about, even if trolls are a bit sad about that. And otherwise, but the USD is falling pretty hard because of the very dovish tone of the Fed, and while the not so dovish European Central Bank is more saying that they're gonna keep, they won't lower the rate anytime soon. So while we're talking and about everything, we were missing what's happening in the market. So we can see that the open was up, then it went down, and now it's going a bit more up. So my original trade plan was something basically, to be completely honest with you, something like that. I can show you. It's entry 47.82, stop loss 47.78, and TP 47.90. So basically, I would have entered somewhere here or here, got kicked out somewhere here, and then it would have went up. Well, it's okay, because while I was talking, I wasn't going in, and on top of that, I would probably have been patient, because the order book would have shown me that this was quite not so hard level, not a level as hard as I expected. So let's have a quick look. We keep this trade, even though we might change, especially the stop loss level. So like I was talking about yesterday, we had a huge hike. That's what I thought. Oh, my two yesterday trades are still here. But basically, yeah, the market went a lot up yesterday, but it's coming up for a very long time. Also, we can think, and we need to think about the fact that we've changed future, because tomorrow is the 4 Witches Day, the day where basically all of the future expires, which then create a lot of volatility. So we are now on the future that has a maturity in June, no, in March 2024, and not the December one. You can't really see it now, but if I bring it, it's you see here it's written, it's H4. So H is for March, 4 is for 2024. So tomorrow we are gonna need to be extremely careful, especially looking at when trading if tac tac tac. So we are gonna, like, since the market is coming back to us, we're gonna see if he gives us our trade. But we're gonna be wise this time and not take it before it's coming back. So we're gonna let it go and try to catch him on the way back. So we can see that we got blocked once here at 47.80, and since then we don't really manage to push this level here, which is kind of new for this market. Okay, so we are getting closer again. And now we broke this level, so we're kind of glad we let it go through. But if we look at the last time we were at those levels, which is a pretty long time ago, I'm gonna try to bring it on your screen. I'm gonna bring it on the screen on the longer time frame, so it's we can see that basically we were at a very rangy level, either when we were coming from upward or from below. So that's why we are very cautious about entering this trade, because we can't really be that confident that it's gonna go our way. Even though it does seem to be looking extremely promising at the moment. And also it's quite hard to trade range. We tend to not want to trade range, because trading range can be extremely tricky, because you never know, like if you look at the range here at the moment, it's not really respecting any level, either at the top or at the bottom. So it's difficult to pick the proper entry point. So that's why most of the time you're not gonna see us trade any range. So yeah, blah blah blah. Where is my cert alpha hour? It's somewhere there. So let's see. Blah 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 blah. Yeah, we are in this shitty stuff here, like somewhere there. So yeah, we will need to be. We will continue to watch it. But this is not really like extremely pleasant trading opportunities that it gives us. So let's continue. So talking about Q&A. So basically, one of the main question one question, not one of the main question, but one of the main points you need to understand when we're talking about trading is the concept of. Well, hello, Anto. Comment ça va? Aujourd'hui, on le fait en anglais, le live. Demain, on le fait en français. On va parler un peu de l'actu comme d'hab. Là, il me dégoûte le marché. Encore une fois, il fait des vieux ranges tout pourris. Même si là, effectivement, il y avait comme j'ai dit, moi, mon plan de trade à la base, c'était de le prendre au support et de le vendre sur la résistance. Mais il a franchement une sale gueule, genre. J'aime pas trop trader des ranges comme ça. Mais let's continue in English. So basically, what is the concept of position? Because if you don't understand the concept of position in trading, it's gonna be like really hard to understand anything I say. So basically, it's the amount and the direction of it's basically your opinion and the way you see the market moving. You can have a long position when you buy a financial or a short position, or the long position is when you buy an asset with the expectation that its price will rise and then sell it later. For example, if you hope to profit from an increase in an asset value, you buy 50 share at 100 and you hope to sell them at 110. You have a long position on that stock. If you have a short position, it's the other way. So basically, you sell an asset that you don't own, that someone lend you, and then you hope to buy it back at a lower price later. Ta, ta, ta. And basically the goal is if you short a stock, you sell it at a high price and you hope to buy it back at a lower price later. For example, while show, yeah, okay, you're missing a part of the screen. I always forget, but for example, I could want to sell it here to buy it back there. I'm not gonna do that because it would be working against the market direction, which is going up today. So, and that's something you should never do. But for example, that would be a short position. A long position would be what I was hoping to do, to buy it here, to sell it there. Tac, tac, tac. So, and basically also in the position, one point that's going to be quite important is the sizing, where you would generally expect where you would generally want for example to that's a thing you want to manage actively to try and in order to accommodate your risk level that are tolerated and that you can take. Damn, Otto, you're quite far. Actually, I'm watching how to say it, my feedback, and you seem to be pretty late behind. The feedback seems to be pretty late behind, so once like in pretty big delay. So I'm gonna insist to do not replicate my trading position because now you're gonna just get slaughtered because you're gonna be late, and then you're gonna have some problem. Especially, for example, if you look now, this is not necessarily the perfect time to buy, considering how strong the downward move is. Anyway, then since also I've talked a bit earlier, but I'm gonna give more detail about it, about basically the future contract, what it is and why do they expire, and why did we change recently the maturity of our contract. That's funny. So basically, to understand easily what's a future contract, the best way is to imagine you're a farmer and you've got a field of wheat. You know that, yeah, never. That's a very important point. You should never copy any other trader strategy, especially if you don't understand it and don't necessarily comprehend the way they generate it. That's the best way to get burned. And like I repeated always, you're always the only person responsible for your trading loss. So, like I was saying, let's go back to our farmer that has his field of wheat. He knows when he's planting his field. In a few months, the price of wheat might have fluctuated. Like it might have been way lower or way higher, and therefore he wants to lock the price at which he will be able to sell it in the future. He then approach a commodity exchange. Since you're the farmer, you approach a commodity exchange and you agree to sell 1,000 bushel of wheat at a slightly higher price than today, but for delivery in 3 months. And that contract is actually a forward contract, but it's a let's say forward contract. And the future contract is the same principle but standardized, which will specify the term, the quantity, the price per quantity, and the exact date of delivery. And the upon agreed price is not the current market price, but a price that generally is slightly above the current market price, especially for financial securities. If we look, for example, at the it's ranging just like where I don't want it. Anyway, like I was saying, if the future is slightly above the future price is generally slightly above the actual price. That's why if you look at the S&P now, it's it's lower by probably 200 points, something like that, than the current the S&P future that we are trading now. Ouais, c'est dégueulasse comme marché. So let's continue. Tac, tac, tac. And when you come. Ouais, mark to market, on s'en fout. And when you're doing with future contract, there's two delivery that are possible when come delivery date. You can either choose a physical delivery. For example, if you buy a future contract of oil, you will at the delivery date you're gonna receive the oil you bought, or cash settlement. For example, the S&P 500, like in the future index, like we're trading, they're gonna have a physical delivery. Like there's gonna be cash settlement and not physical delivery. And why do we trade future? It's because it provides us with leverage, where we control a large quantity of big contract with a small amount of money. And while it magnifies potential profit, it also and mostly at the same time increase the risk of significant loss. And in a sense, future contracts are basically a tool to hedge against potential loss or capitalize on favorable market conditions. Tac, tac, tac. So that's one of the first things you need to understand about a future contract. It's the big importance of what it is, how it works, and basically the importance of understanding the way it works because of the magnifying effect that is leverage. Then an index, it's a benchmark that reflects the collective value of a specific group of assets, such as stocks, bonds. It can also be stocks and bonds are the main, mostly there's some crypto index and stuff like that. The most well-known example is the stock market index, like for example the S&P 500. In French, it's going to be the CAC 40. In Alman, it's going to be the DAX. The Nasdaq also is quite known. Well, there's a lot of different index that we know that are quite known. And there's, for example, some bond index, some commodities index. You're gonna find a lot. And basically, this index is gonna provide a quick and easy way to quantify the health of a financial sector. For example, if you take luxury index, you're gonna see have a good way of knowing the health of the global financial like luxury sector, or there's some financial index, stuff like that. And basically, it's gonna allow you to understand easily, way more easy, to follow the market situation way more easily than if you need to track each stock individually. And basically, trading futures to index will allow us to have a proper, like, to trade on the global economic situation of a country, or also a sector, depending on what index we're trading. Tac, tac, tac. So then we had a question about what's basically our daily trading routine. Especially like if you look on YouTube, you can see a lot. I was gonna share shit ton, but really a lot of 24 hours in my life where you see a trader that actually never trade. Well, that is completely unrealistic in real life. I'm basically trading from 8:30 in the morning to till when I turn off the PC and leave the Paris Trading Academy. So depending on the day, it's gonna be around 6, 5, or sometimes it's later. It's gonna depend. But basically, once we arrive, it starts with fundamental analysis. We're gonna look at the economic news, the different asset class, the economic calendar, basically everything that can affect the global the global financial market, to be able to know every element that's gonna affect the price for the day, and in order to be able to anticipate the direction. Then we're gonna do a technical analysis where we're gonna look at the market, see how it's behaving, it has behaved, or what's the price action, is there some, what are the key level for the day, stuff like that. And once we've done that, we're gonna try to write our trade plan. We're actually gonna write our trade plan and try to figure out exactly which opportunity the market might give us. Then we write our trade plan with our entry point, our stop loss, our take profit, depending on what we saw before. And everything we did before is a key to this point. Like, this is where we're gonna say, okay, so if I enter here, I'm gonna put my stop loss here, I'm gonna go long, I'm gonna go short, I'm gonna go this way because this. My stop is gonna be here because I saw that, stuff like that. So we're gonna basically, this is one of the most important point of the day, of the trading day. Then afterward, we watch the market, see how it behaved today. Is it volatile? Is it not? Is there big buyers, big sellers? And then we wait for the market. Is it balanced like today, for example? Like today, the market is especially balanced. Since the open, it's still on the more or less same levels. And before, when the European and Asian were working, now when the European was working, it was actually slightly going down, but when the Asian was working, it was going up. So basically, it's a quite balanced market, which is not necessarily even better, not at all what we want. We want more of a unbalanced market where the seller are more present or less more in a rush or everything, because it's as buyers as sellers, but that's another question. And then once the market reach the level that interests us and is doing what we expect him to do, we look at the order book to confirm either our trade like our screen, our trade plan is realistic or is not happening. For example, my original trade plan was to buy somewhere around here and go there. We see like now on the order book that basically we can't, we're trying to break this level, but every time we're getting pushed back and quite strongly. So this is not the time to enter the trade, even though we've reached this level. So I'm not gonna put like an order here and hope the market is picking me. And is when the market is picking me, it's gonna go where like because if you do that, you're then gonna get like slaughtered because like now I would be like in drawdown, and I don't know for sure that the market is gonna break this level. As we see, so far it's been pushed back and it's getting almost lower every time. So we need to know the keyword is patience to summarize quite frankly. So let's see. Okay, so you see we went one up, we're coming back, and every time we're getting pushed back. So at the order book, we might want to wait like until there's a clear break. And now so far you see like there's lots of volume at this price level. Ah, now we broke. Yeah, we're struggling. As like I said, we can see with the order book that we are quite struggling. So then, this is basically how we do in a day, what we do in a trading day. Then afterward, on personal level, I've got once my trading day is over, I do my life. And then also the last question I had, like I said, no, I have two more questions. If I'm not saying something, yeah, two more questions, which were basically about how to start trading because we've got a lot of beginners since we're teaching trading, and sometimes people contact us and they don't know what trading is and they don't even know the basics of trading, but they already want to trade. So if you want to start trading, the first and key element is please train yourself. Please, please, please train yourself. Trading is financially dangerous, and if you don't know what you're gonna do, you're gonna get slaughtered. There's actually a saying that says bull make money, bear make money, and lamb get slaughtered. Even though it's not necessarily learned. So please, 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 please learn, know what you're doing. And once you start to get knowledge, know what is trading, how does it work, what's risk management, how does it work, how to properly manage your position sizing, what's money management, stuff like that. You should start with a demo account, figure out if you can be profitable. If you can't be profitable on the demo account, like you should probably either stop completely or change most of the thing you're doing, because if you can't be profitable on demo account, you're never gonna be profitable on a brokerage account. I'm not touching this shit. Market like this market. Ta, ta, ta. Then once you trade, you see if you are profitable. I personally would trade on a brokerage account with very little capital, and so therefore very small contract, just to try and figure out the difference between trading real money versus demo account. Like for example, maybe like 200 euros trading micro DAX or micro S&P or like that should be give you enough time to properly to understand the difference between trading on demo account and trading with real money. And if you're profitable with your actual money, yeah, I'm not touching this. If you're profitable with your real money, and but you don't have enough capital to to trade big contract, then only then maybe you should consider prop firm, but not if you have enough capital, or not if you are not profitable. Like this should not be trading in prop firm should not be the first step after the demo account, because trading in with prop firm is actually harder than trading with your own money. Therefore, you should trade with your own account, but still maintain very high quality risk management. Then the last question, and I think after that we're gonna like call it a day, unless you've got something else you want to talk about. But basically, it was why does central bank have such an effect on the financial market? Because I've been speaking of central bank for several live now, and with yesterday's meeting, we could see the big effect it had, like at really the second market, the bank published their like rate, it shoot upward, and it kept shooting all throughout their press conference. So basically, the central bank decide how easy it is for bank to lend money to retail, to company, to government, to everything. Since our economy and most of the economy in the world are basically based on debt and propped up by debt. If debt is harder to get, the profit of the company, the consumption by consumer, everything, is gonna get lower. For, so basically, the revenue of the company are gonna get lower, the investment of the company are gonna reduce. Basically, everything. If the borrowing is harder, borrowing money is hard. The everything is gonna like the economy is gonna slow down. If it's easy, it's gonna accelerate. But the problem if it accelerates too much is inflation. Basically, if there's too much inflation, the buying power of the consumer get lower. Therefore, they're not consuming. Therefore, the revenue of the company go down. So basically, the goal of the central bank is to maintain a 2% inflation, so that consumer are incentivized to consume, and but it's not going up too much so that they can't consume anymore. And since financial market is gonna rely a lot on the economy and the strength and health of the economy, then any change in lending condition is gonna reflect hardly on it's gonna not hardly, but it's gonna strongly reflect on the financial index and futures. Well, I believe that's gonna be it for me. So thanks for everyone that stayed up until now. I will see you well tomorrow for the live in French. And so we are gonna speak a bit more about more or less the same topic as today, but I might prepare like a short video about why you shouldn't trust Instagram trader. So thank you everyone, goodbye, and don't forget to like